Hello everyone, welcome to the 7th edition of Finance Crunch. Today we're going to be talking about a stock that could triple in value in 2021. So let's get started. Today we're going to be discussing WW International Incorporated, otherwise known as Weight Watchers. The company is listed on the NASDAQ as WW. The company was started by Jean Nittek, a housewife and mother living in Queens, New York City. Jean previously had an issue with losing weight, so in 1961 she decided to attend the New York City's Board of Health Obesity Clinic. The program was a success and she lost 20 pounds, but she found that the clinic leader did not provide information at the weekly meetings that would lead to sustainable success. Discussion was also discouraged. To bridge the gap, Jean decided to start a support group with her fellow overweight friends that included weekly meetings and weigh-ins. Members were drawn to the meetings because it provided empathy, rapport, mutual understanding, support, and sharing of stories and ideas. Something that was different from the usual meetings that people experienced before. The group started off small with 6 members but grew to 40 very rapidly. 2 of the group members, Al and Felice Lippert, saw potential in what Jean had created and convinced her to start a business. With that being said, Weight Watchers Inc. was officially launched in 1963. With the first meeting attracting 400 attendees. The company would later be franchised in 1964 and grow to an international brand by 1967 with over 102 franchises. In 1978, the company was sold to the Heinz Company for $72 million. It later would be sold to a private equity firm, Artel Luxembourg, in 1999 for $735 million in a leveraged buyout by Invis Group. Heinz still holds a small position in the company and distributes frozen foods bearing the Weight Watchers brand. The Invis Group manages the private equity firm Artel Luxembourg, which is run by Raymond DeBain. Artel put up $224 million and Weight Watchers financed the rest of the buyout with debt. In 2001, the chairman of Weight Watchers, Raymond DeBain, organized an IPO. And as of now, Artel remains the company's largest shareholder. Oprah is also a notable investor in this company as she owns a significant stake and she acts as a brand advocate. Today, the company has shifted its focus to overall health, wellness, and fitness. The WW app has been updated so that Amazon Alexa and Google Assistant can be integrated in. They have also made a substantial partnership with the meditation app Headspace to offer customizable mindfulness content for members. At this point, you may be wondering, why Weight Watchers? It seems like this brand has been somewhat forgotten by society, but one will have to look into the future to see the opportunities that await. After the COVID-19 pandemic is resolved from the growing number of vaccination rates, restrictions are going to be lifted in many jurisdictions, and people will start to go about their daily lives. The strain on people's health has been amplified as a result of the lockdowns in many different countries. Many studies have shown negative impacts on people's mental and physical health from isolation and inactivity. Improving health also equates to an improved immune system which can fight against diseases. In my opinion, people are going to come to a realization for the importance of one's health and turn to recognizable brands such as Weight Watchers, specifically their WW app. Older demographics that grew up with the brand will also take into account the brand's proven track record of success. This will greatly benefit the company's earnings going forward and push the price upwards. Many infectious disease experts have been predicting that the pandemic will come to a partial end once the majority of people will get vaccinated. Some have been predicting that this will occur in September and it will allow the people to return to their normal lives that they had before the pandemic. Around this time, WW should see an uptick in earnings, specifically their Q3 and Q4 2021 quarterly earnings. Both the ending of the pandemic and the earnings reports will consequentially be catalysts for growth for the company. In my opinion, the stock is undervalued and you could see the price double or triple through late 2021 and early 2022. I say this for several reasons, one being that the company is profitable with a 12-month trailing average normalized EBITDA of over $338 million. The normalized EBITDA decreased from over $430 million in 2018 to over $331 million in 2019. This is attributable to decreases in revenue from losses in subscribers and missed revenue targets at the time. Going into the first 9 months of 2020, the revenues were down by 3%, mainly due to the COVID-19 lockdowns that have been impacting WW's studio business, which accounts for 43% of its revenue mix. But WW has made a crucial shift in its business model. As of Q3 2020, WW's digital revenue has increased by 23%. The digitization of the company has recouped some of the losses that the company has had due to the pandemic, and will benefit the company's bottom line going forward. The price of the stock is likely to fluctuate in the next couple of quarters, but there might be a significant upside for holding this stock going into Q3, Q4 2021. This is mainly due to 3 factors: strong growth in fundamentals, brand recognition, and a company shift towards digitization. I recommend getting in before Q3 2021. Just a reminder, I'm not a financial advisor or professional, and everything you hear in this video is my personal opinion. Alright guys, that's it. Thanks for watching. Don't forget to like and subscribe.